Welcome to our market view presentation. In my group, we have Fraser and Nelson, and in this presentation, we will be analyzing what will happen to the AUD to GBP exchange rate in the next 3 to 6 months. There are a number of determinants that affect the exchange rate, from relative interest rates to global events.
So when we're looking at relative interest rates, generally the rule is that higher interest rates in one country means that we have a stronger hold over the other country. So in Australia, for the past couple of years or so, we've actually been at historically low interest rates of about 1.5%, when we normally prefer to sit around 3 to 3.5. Whilst Britain has, for the last 10 years or so, wanted to stick around about 0.5%, although over 2017 we saw a drop to 0.25%. So we can actually see that the rise of the sterling interest rates in about October 2017, the Australian dollar lost value against the pound. So we can actually see a direct correlation looking at the theory that we just went through. And you'll see more of that on the next slide. And considering that the RBA is unlikely to change interest rates anytime soon, as economic growth hasn't exactly picked up the way that they wanted to, we're still kind of like waiting around for that to happen. We expect that in the short term, according to relative interest rates, that the AUD will continue to fall against the pound. So we can see just in this chart here that when the interest rate in Great Britain changed, there was a very direct correlation between Australian and Great British exchange rate.
Now, we will talk about how relative inflation rates have affect the value of a currency. Overall, a higher inflation rate tends to have a negative impact on the exchange rate. According to the RBA, Australia's inflation rate is approximately 1.9% in December of 2017, which is significantly lower than the inflation rate of the United Kingdom, which sits at around 2.7% in December of 2017. Lower rate of inflation leads to the strengthening of the value of the currency. This can be shown when Australia's inflation rate is lower than the United Kingdom in December of 2017. Therefore, the Australian dollar strengthens against the British pound. From the graph, it can be shown that in the month of December, the exchange rate between the AUD to GBP starts to rise. The reason behind this is because Australia has a lower inflation rate as compared to the United Kingdom. It can be seen that there is a steady decrease of the GBP to AUD exchange rate as the inflation rate in the United Kingdom increases. Now I'll be talking about how commodity prices has an effect on exchange rate. Increasing the commodity prices will cause the exchange rate to increase because foreign countries need to use more of their currency to buy Australian dollars. Australia's biggest export is the iron ore, and China is the primary trader to us. If the demand of iron ore from China falls, it will place a downward effect on commodity prices, in turn causing the exchange rate of the Australian dollar to fall. It is known that from the mining boom that a high price of commodities can accelerate economic growth significantly, and in turn our exchange rate. Over the course of 2017, it can be seen that there was a large rise in the price of crude oil without a similar change in the exchange rate. This might be due to the fact that Australia has been making strides to separate its dependence on commodity exports. Therefore, we cannot exactly count on this as a primary forecast tool. Another factor that affects a country's exchange rate is the economic growth. There is a positive correlation between economic growth and the value of a currency. Higher economic growth leads to high investment and export rate, which leads to the appreciation of the currency. Australia's growth rate was 2.77% and the United Kingdom's growth rate was 1.81% in 2016. Therefore, the Australian dollar appreciates compared to the British pound. The decrease in the United Kingdom's economic growth in 2016 might be due to Brexit. From graph 1, it can be seen that the exchange rate between AUD to GBP increases as the GDP growth rate for Australia increases. However, in graph 2, the exchange rate between GBP to AUD decreases because the United Kingdom has a lower GDP growth rate as compared to Australia.
I'll be talking on the speculation of Australian dollar exchange rate. It was an Australian dollar to 0.5647 Great Britain pound decreases to an Australian dollar to 0.5592 Great Britain pound. GBP currency got stronger due to Bank of England, the BOE, was rising market expectation and it may rise the interest rate of Great Britain pound as well. AUD to GBP exchange rate will approximately fall from 0.5449 on April 2018 to 0.5242 on July 2018. Below is the chart of GBP to AUD forecast by month on the April 2018 to July 2018.
So, global events is an interesting topic to talk about with Great Britain at the moment, considering they are going through the Brexit scandal, really. Because it's quite clear that Brexit is a very strong influencer over exchange rates between the pound and really most currencies. Because we're seeing a situation where politics are controlling the exchange rates a lot more than economics at the moment. So Brexit negotiations haven't officially begun yet, and will start soon. So I think the assumption is that the short term, we should probably see a depreciation in the sterling, as it's very unlikely that things will go as smoothly as people would hope for. And so far that's exactly how the market has responded. So when we're looking at the exchange rate for Australian dollars to Great British pounds, I think we'll see the Australian dollar grow against the sterling in relation to global events. And so just briefly here, we can see when the Brexit vote approximately occurred, there is a steep drop in the exchange rate, and we still have not seen a full recovery, even though it's starting to get back up. Because we haven't actually reached negotiations yet, we cannot make any really accurate predictions about whether it will go and reach recovery. So trying to forecast this commodity currency at the moment is a bit like divination, because we have this large cloud over us named Brexit, and no one is exactly sure what's going to happen. So to us, we think the effect of Brexit will have the largest effect on our commodity coupling. We have seen just an almost structural shift in Australia's currency exchange rate between the pound since Brexit, the vote occurred. So we have seen a dip in the past few months, but that appears to be from changes in exchange rates. But also Brexit, the entire discussion around it has sort of taken a bit of a dip recently, and the markets have started kind of not paying it as much attention, although it was announced, I believe, last week that negotiations are set to occur in the next month or so. So that's when I believe we'll see a large change, and I think that we'll see an appreciation of the Australian dollar relative to the pound, just because I think it's, at least in the short term, because I think it's very unlikely that negotiations will go particularly smoothly. So that's why we believe that the Australian dollar will strengthen over the sterling.